Good morning, it's Monday the 14th of November and welcome to Atlantic Capital Markets' regular roundup of the key economic highlights coming up over the coming week. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets. We'll then dive into some of the more significant highlights afterwards, giving our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with the release of the Eurozone's industrial production figures. On Tuesday, the Reserve Bank of Australia released their latest meeting minutes, GDP results from Japan, retail sales in China, the latest unemployment statistics here in the UK, GDP in the Eurozone, the ZEW survey index and PPIs in the US. On Wednesday, we get a look at inflation with the CPIs from both the UK and Canada and the retail sales over in the US. And we'll talk more about these three straight afterwards. Also on Wednesday, the weekly release of the crude oil stockpiles. On Thursday, we'll get the latest employment figures in Australia, the CPIs in the Eurozone and the jobless claims in the US. And finally on Thursday, UK Chancellor Jeremy Hunt releases his much anticipated UK fiscal statement, which we'll take a look at in more detail afterwards. And on Friday, the latest UK retail sales figures. And the companies that we'll hear trading updates from this week start today with Informa. On Tuesday, Vodafone release H1 results and US retail giant Walmart release their Q3s, both of which we'll discuss in more detail in a moment. Also on Tuesday, we'll hear from BAE Systems, Imperial Brands and Home Depot. On Wednesday, chipmaker Nvidia releases its Q3s, and we'll give our own thoughts on that shortly. Also on Wednesday, we'll hear from Experian, SSE, Sage, Lowe's and Target. Thursday sees a release of interim results from Burberry and Royal Mail owner International Distribution Services, and both of those we'll discuss towards the end of today's video. Also on Thursday, we'll see results from Alibaba, Close Brothers and Macy's. And finally on Friday, we'll hear from JD.com and Foot Locker. Well, last week was a big week for the markets after US inflation cooled again, raising optimism that the Federal Reserve could act less aggressively in raising interest rates over the coming meetings. The market now sees a 50 basis point hike in December. The upbeat mood lifted stocks on both sides of the Atlantic. Meanwhile, China easing some COVID restrictions also helped Asian markets soar. More volatility is expected this week with UK inflation data and the Chancellor's fiscal statement, and of course a slew of earnings. So let's take a look at this week's bigger stories in more detail. The telecoms giant Vodafone is due to report H1 results on Tuesday, which come as CEO Reed has been busy selling off or merging parts of the massive businesses. In addition to the Vantage Towers sell-off, deals have also been agreed for Hungary operations, and talks are underway to merge UK operations with CK Hutchison Holdings 3 UK. Revenue weakness in Europe as well as surging prices are likely to be headwinds. Expectations are for a slowdown in organic service revenue growth, pulled lower by operations in both Spain and Italy. Also on Tuesday, Walmart is due to release their Q3 earnings after Q2 saw revenues come in at $152.86 billion and profits of $1.77 a share. Over the past 2 quarters, the big issue has been inventory levels as consumers reined in spending on discretionary items, prioritising food. However, with inflation trending lower in October, retail stocks such as Walmart ripped higher last week on optimism that consumer prices have peaked and could be trending lower. Expectations for revenues of $147.55 billion, earnings per share of $1.31 on slightly lower operating margins of 3.6%. Wednesday sees the release of the latest UK CPIs. While UK inflation rose to 10.1% year-on-year in September, that's up from 9.9% the previous month. In October, prices are expected to rise again to 10.3% annually, even as the government energy support bill comes into force. The Bank of England expects inflation to rise to 11% over the coming month. However, the central bank also downwardly revised its year-out inflation forecast to 5.2% from 9% as the UK enters a prolonged recession, which will slow inflation without the need for aggressive rate hikes. Chipmaker Nvidia are due to release their Q3s on Wednesday, while chip stocks have been under pressure this year amidst restrictions on chip sales to China and falling demand for PCs. Demand has slowed as consumers spend less on tech, and US-China geopolitical tensions are also a headwind, given that China accounts for 25% of its sales. There has been some progress here after last week. Nvidia unveiled a chip that has permission to export to China. Against this backdrop, as Nvidia reports its Q3s, Wall Street is expecting earnings per share to fall 40% to 71 cents on revenues of $5.8 billion, a 17.6% decline from last year. Meanwhile, sales in the October quarter in the data segment, the most important business segment, are expected to fall by 1% from the previous quarter. Well, Wednesday also sees a release of the latest US retail sales figures. While the US consumer has proved to be resilient across the year, even as inflation remains elevated. Interest rates are rising and a recession is looming. US consumer confidence is starting to show signs of improvement. Sales came in unchanged at 0% month-on-month in September and expected to rise a solid 0.8% month-on-month in October. Strong retail sales could fuel bets that the Fed will act more aggressively to tighten monetary policy. So, do keep an eye this week on the US dollar and US indices. And finally on Wednesday, Canada is due to release its latest CPIs. Well, as the Bank of Canada considers raising interest rates at a slower pace, plenty of attention will be on inflation data to see whether there's any sign that inflation could be slowing. In September, inflation was ahead of forecasts at 6.9%, but down from August 7%. Could October see another decline? Given the massive increase in job creation and the jump in hourly wages, inflation may not cool by much. The US dollar-Canadian dollar pairing has fallen 2.5% over the past 3 weeks. Well, on Thursday, 17th of November, Chancellor Jeremy Hunt will outline how he intends to fill a £50 billion black hole in our public finances. The fiscal plan comes as the gilt markets recovered and the pound's rebounded from Liz Truss's short-lived leadership's chaos. Taxes are expected to rise, with capital gains, dividends and inheritance tax all expected to rise. The income tax band limits are set to be frozen and the 45% rate lowered to £125,000. Spending cuts also likely to be announced across the board. Fiscal tightening at a time when interest rates are rising and inflation is high means that household incomes will be squeezed yet further. Such a bleak outlook could pull the pound lower. Well, Burberry are due to release interim results on Thursday. The company's share price dropped to an 18-month low earlier this year and has since been grinding higher under the broad expectation that after disappointing Q1 sales figures, the picture can only get better. COVID restrictions in China hurt Q1 results as sales rose just 1%. Outside of China, comparable store sales were better, rising 16%. Earnings in China fell 35% and the US business slowed by 4%. Retail revenue was £505 million in the 13 weeks to July the 2nd. COVID lockdowns have continued in China and there are concerns over consumer spending. However, news last week that China is easing some of those restrictions could help the outlook for the company. Well, the owner of Royal Mail International Distribution Services reports on Thursday at a time when battles with unions over workers' pay continue to be a source of concern for workers, customers and of course shareholders. While 2 strikes planned for the start of November have been cancelled, this is unlikely to be the end of the problems, and rumours of further strikes are building for the end of November or start of December. Of course, the busiest period of the year for them. Much of the focus this week will be on updates regarding negotiations and the impact that the strikes are having on the business performance. In October, the group suggested it was expecting an H1 underlying loss of £219 million. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Pershing Square, Bunzl, Unilever, GSK, DCC, Aveva, B&M European Retail. And in the FTSE 250, we'll hear from Genus, Fidelity Emerging Markets, ICG Enterprise, Bytes Technology Group, Murray Income Trust, Scottish American Investment Company, Murray Income Trust, and last but not least, UK Commercial Property. So there you have it. It's going to be a key week to gauge if inflation has turned a corner across several economies, or is more deeply entrenched than previously thought. In turn, this is going to have a big impact on the next round of interest rate decisions as the central banks navigate the tightrope between recession and rampant inflation. Well, Thursday's fiscal statement from Jeremy Hunt is going to be the first flavour of the new Chancellor's strategy going forward. All the media portents point to a tsunami of increased taxation, but we've all seen this before, where warnings of the worst imaginable turn out to be just softening up the public for simple bad news, which somehow then doesn't seem so bad. Well, we shall see. What we do know is that we're here at Atlantic Capital Markets to guide our clients through the worst of what the Chancellor and his apocalyptic horsemen can throw at us. So as always, thanks for watching, and don't forget to click on that subscribe button to make sure you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.